I think Mexico is 80% of Mexican exports go to the U.S. And Mexico and the U.S. are very, very much in a lot of ways tied at the hip. So the short answer to that is that, as long as you don't see a huge takeoff in growth in U.S., I think in the near term it's going to be very, very difficult to see that happen in Mexico. Now in the longer term, if you get beyond what could be volatility around U.S. elections and around Mexican elections, Mexico has laid the ground with major structural reforms aimed at attracting both domestic and foreign direct investment. And I think growth will definitely pick up over the longer term, certainly to a higher level than the mid 2% level handle where it is these days. Yeah. I think that some of the main factors are exogenous to Mexico's control, and mainly being the rhetoric around the U.S. electoral cycle. I see both local and hard currency debt is in Mexico, especially in my area of specialties and the hard currency side, the corporate space and the quasi-sovereign space is being very, very attractive. However, you just have to be able to stomach the near-term volatility. Well, I think if you look at credit spreads in Mexico, they're undoubtedly tighter than among some of their other EM peers. But the point of Mexico is that there are a lot of developed market institutional investors that are still how can I say this? They're underinvested in emerging markets. And you also have another dynamic where as developed market rates go low and even negative in some cases, there's a pull towards the yield on offer in emerging markets. So if you look at where Mexico is positioned relative to the U.S., the access of U.S. institutional investors to Mexican management teams, the high level degree of professionalism which Mexican companies are managed, I think that this is the first place that capital begins to capital begins to flow. So Mexico does trade tighter than a lot of its EM peers, but I think it's justified. Well, I think near term, I think that the campaign rhetoric is only going to pick up from here to the November 8th elections. There are some pretty radical ideas that are being thrown around. This is typical with any election campaign, but this time even more so seem to be directed a lot towards Mexico. But in the longer term, I really don't see a scenario where a lot of the very, very radical proposals such as limitation on limiting or curbing remittances, building a wall on the Mexico border, some of these ideas that are being espoused by some of the candidates, I don't see them as being very feasible. So I think in the near term there could be volatility in portfolio flows and FDI flows, more so in the local currency market. If you look at, there's a sizable penetration of foreign investors in bonos and Mexican local currency fixed income. But in the longer term, I think if we're sitting here in 2 years, I think Mexico will look like a very, very attractive destination.